Hi, welcome. It's Mary Ellen McGonigal, Senior Managing Director of Stocks here at Simpler, with your weekly Edge show. Let's take a look at what we will be covering today. As usual, we'll go ahead and drill down, take a look at the current markets. How did we close the week? What you need to be on the lookout for going forward based on my work, and then also looking further behind the markets and uncover where the potential strength has been versus weakness this past week. We're also going to take a look at some of the more impactful news that drove price action this week, and all of this is with an eye toward helping prepare you for next week and beyond. Last up, we're going to take a look at a viewer question of the week, and it was a great one. It's all about best practices for creating a watch list. And as we move on, this will make more sense, but I will identify certain characteristics needed from my work again to get in front of stocks once the broader markets resume their uptrend. So let's take a look at those news items. First up, Fed Chair Powell did come out earlier this week and reiterated again that he is on the move to fight inflation. And what that means to the broader markets is that the Federal Reserve will reduce their generous monetary policy and put in place what is called tight monetary policy. And in essence, they're going to reduce their bond buying. And his adamancy as relating to this statement really rattled the markets earlier this week. Generally, when we are in periods of rising inflation, you will see that impact certain areas as we move on. I'm going to share that with you because they can be positive or not. And then also news out about the Omicron variant that was first announced last Friday, and it has now spread to 38 countries. Of course, there is not enough information to really know the full potential impact, and of course, the markets do not like uncertainty. This could potentially impact growth, so that was a big factor last week. Also, on Friday, we did see the monthly jobless report, and it came out growth was only 210,000 new jobs, while the unemployment rate dropped to 4.2%. And when you combine these two reports, it does indicate a really pressure as it relates to the job community, which in turn will produce wage growth pressures, and that's also inflationary and not what the market wants. So lots of bumpiness certainly last week. So from here, let's take a look at the current markets and see where we are into Friday's close. So first up here, we are taking a look at the daily chart for the S&P 500, and what I am pointing out to you here is on Wednesday we did see the S&P 500 break below its 50-day simple moving average, and from my work this is a real line in the sand, if you will, in when the indexes break below this. And in this case, it did so on very high volume. That is negative for the near-term prospects for the markets. And from here, what we can do is take a look at some of these outside momentum indicators. The RSI, in conjunction with that break, is now in negative territory. And then also stochastics below 50 in negative territory as well. So overall, the near-term prospects for the markets are not constructive. What we can do is take a look at historical precedent, quite simply go back to this September pullback that we experienced, going into this drop below the 50-day moving average in late September. This was due to the Delta variant, which at that time was spreading, and then also higher interest rates were really pushing stocks down. More importantly, what you want to be on the lookout for to turn constructive is price action similar to mid-October, back above those moving average, outside momentum indicators turn positive, and then other factors as well relative to individual groupings. Where is that leadership? So from here, let's drill down, take a look at the 11 underlying sectors within the S&P 500, and we're looking at a 2-month daily price price chart here. And I've gone ahead and added what I call what is an RSI, relative strength indicator. I'm going to sort this list of the 11 sectors in descending order because we want to see where that relative outperformance is currently taking place. And take a look. We can see utilities, real estate, and staple stocks up here in the forefront. These groups are, of course, defensive, and it really is signaling a risk-off sentiment among investors. Technology, surprisingly, up here in the forefront. That has everything to do with two of the primary underlying stocks in that sector, and that's Apple, which was up 2%. And one other primary area that I am going to share with you in our next segment. We also want to, of course, be aware of where that weakness is. Make sure you're not overweighted. And we can see continued weakness in communication services sector, now broken below that 200-day simple moving average. Netflix is in there, down 10% this week. Facebook down 8.5%, and then weakness elsewhere. And these are internet-related stocks that don't do well primarily during inflationary periods. And then also wanting to make you aware of weakness in financials. We did see this next area. I will share with you why the weakness in financials, but primarily bank stocks really got hit this week. Again, big volume characteristics, negative outside momentum indicators indicating potential continued weakness. I bring up financials because they had been really relatively outperforming, particularly during that pullback that we just reviewed, that September to October period, but not so currently. So from here, I want to share with you the underlying sub-industry groupings, take us even further beyond those sectors. So what I'm sharing with you here are select industry groupings within technology. We're going to look at bank stocks, interest rates, price of oil, and so on. So again, that RSI descending, and we can see up here in the forefront a big spike here in volatility, and this is the VIX, better known as the fear index. As investors' fears come into light, you will see a pickup, but there was a very dramatic spike. And historically, when we see these spikes in the volatility index, oftentimes you will get a bounce as these enter into oversold periods. However, a bounce in the broader markets to the upside, but you certainly, I would not be sucked in. I'm going to want to see positive characteristics in the broader markets before jumping back in. We talked about technology up there in the forefront. This is the second area that contributed to that sector outperforming the technology sector. So here we are looking at semiconductor, SOXX, and it certainly has been dicey. Semiconductor stocks were flat for the week, and we can see that the RSI is still up here in positive territory. You did have this MACD black line down through the red indicating the near-term upside momentum has shifted. However, it is still in positive territory. So as we move on, you'll uncover why I am sharing with you this relative outperformance to the broader markets. And the primary reason is when the downward pressure in the broader markets is reduced, you will see those areas that have held up well become the first out of the gate and oftentimes go on to outperform. So looking at some of these weaker areas, this is IWM, the Russell 2000, and really couldn't think of a better example of really how adverse to risk investors are. Small cap stocks do better when there's confidence in the markets, and a very significant, another over 4% drop this week. Huge volume characteristics really just driving this area down. Another weaker area, we want to make sure that you're not certainly highly exposed, is going to be software stocks. This is something I've been covering for a while because I do like to get involved in stocks in this area. They tend to be high growth when they're in an uptrend. And those of you that have been subscribing to my MEM Edge report will know that we have been exiting stocks up in this area as they began to stall. Subsequently, they have been deteriorating very dramatically. I can take you back to this February period, another tough time for software stocks, using historical precedent as to what you will need to see to turn constructive on this group again. This February period was a period of rising interest rates. Currently, it's rising inflation. Both characteristics are not good for these higher growth and certainly higher multiple stocks. So from here, I did mention that viewer question relating to best practices for putting together a watch list. So I'm going to share with you a couple of stocks in technology. That's an area that I tend to gravitate toward. Those are the faster moving, higher growth names. And we can take a quick look. I'm going to share with you 3 stocks. First up is Seagate Technology, STX, and we can see this is a hardware company. It did have this big computer hardware, a big spike up here. This was all about super strong earnings. We did get into an overbought position here in mid-November, so certainly a pullback was in order. The stock pulled very orderly back to this 21-day simple moving average and is now back above its shorter term 10-day. Very constructive price action here. I would wait for the broader markets to turn, but this would and could be an ideal candidate once that happens. Let's take a look at another technology-related stock, and that is Dell Computers, DELL. And we can see that this is another stock that really bucked this week's downtrend. It's all about new PC sales. Dell did come out and mention that now that offices are reopening, they saw a nice uptick in computer sales. And what I wanted to point out to you in marking this up is that Dell is poised to break out of a nice 6-week base. We have outside momentum indicators that are positive. And take a look, this MACD is just now poised, black line up through the red. That's very constructive action. So certainly another name for your watch list. And I'm going to move out of tech and share one other name with you. And this is a biotech stock. Now, biotech names are not doing well by and large, but this is a name certainly for that watch list when the market pressures lift. This is BNTX, BioNTech, and this particular company does develop products for cancer disease. And we can see this is the company came out with good earnings. It gapped up, pulled back, dipped below this 10-day simple moving average, but is now back above. And also the outside momentum indicators are in positive positions. So rather constructive, but as you may note, when you are looking to put together a watch list, overarching theme is those names that are outperforming are actually doing well in an otherwise dismal market, but also they have those growth components in place. And again, when those pressures lift, these should be the first names out of the gate and on to do much better. Everyone have a great weekend. If you want to be tuned in to when the markets turn positive, which stocks you should be overweighting, take a look at my MEM Edge report. I have a trial for a nominal fee for 4 weeks. You can use that link below, and I'd welcome you to take advantage of the offer for this twice weekly MEM Edge report. Have a great weekend. I'll see you next Saturday. Hey, Mary Ellen here with Simpler Trading. Thanks for watching the video. If you liked what you saw, go ahead and hit that like button and leave comments below. And if you'd like to be notified to future videos, you can hit that bell icon and subscribe. Don't leave without subscribing to my MEM Edge bi-weekly report. I do have a special trial offer. And for those who'd like to learn about trading live with us, you can go ahead to simplertrading.com to learn more.